I think investors, even when they're looking to invest in mutual funds, they check the funds that are ranked on the apps. And then that's how they go about it. But what should they actually be looking for as a
See,
metric?
it's a little deeper than that. Let me address that a little wider than the whole thing. If you look at the last 20, 25 years of Indian stock market, typically the Nifty 50, which is what the stock market kind of is judged by, has doubled traditionally in 7 or 8 years, right? But then this great, great is not the right word, but we got a definite bottom during COVID, and after that the market kind of rebounded in 3 4 years, and that set a wrong precedent, right? Please understand that's an aberration,
Correct.
and as we speak, 1.5 2 years, we're probably reversing to that earlier mean. So I am putting it out. It's up to time to answer this. Maybe, and it's a big maybe, all data crunching based on the last 3 year data can be wrong because it's an aberration. So people who are looking at last 1 year, 2 year, 3 year data to form conclusions can go horribly wrong in the next 5. I'm using the word horribly purposefully, right? So a longer term data is probably what people should look at, right?
Okay.
Having said that, India is as a cusp where the next 4 trillion will be built on very different industries. The first trillion was built on different industries. 1, 2, 3, or 4 were built on banking and financials. And when you look at investing for the future, maybe investing in portfolios which look futuristic can help the young more than investments which are in past industries, something. And they are good at inferring what I'm saying.
Yeah.
I am a big fan of their minds, their ability to grasp things ahead of our time.
Yeah.
So if you keep these 2 pointers in mind, no, portfolio can be very futuristic.
Okay. Before I get to children and investing, one more question. You've about the risk profile, and it's interesting that you've said that your risk profile changes with the life stage, and I thought that that's so pertinent, right? Like where you are at 20 is so drastically different from your circumstances at the age of 40. So how do people know what is the right investment avenue, or what do they need to keep in mind to know where their asset allocations should go and how much into direct equities, mutual funds,
See, Aman,
alternates?
you are not born with 2 things. One is courage, one is risk profile. Yeah. And these are the 2 things that are needed for investing.
Okay.
Because when you invest for the future. You have to be an optimist to invest. Because if you don't see a brighter tomorrow, you shouldn't be investing. That's point number 1. And both these change with life. Investing is a journey of knowing your life. And more you are in touch with yourself, the better your portfolio will be. Knowing yourself meaning what is your want and what is your need. And from your need, form your aspirations. And everybody's aspirations are right. And people should push themselves on their aspirations.
Yeah.
Otherwise, why are you doing this whole thing, right?
Okay.
So when you put that in perspective, it's just continuously asking those questions to yourself which lead to your portfolio. And everybody's risk profile is correct. Everybody's portfolio approach is correct. That's why this term is called personal finance. It is personal, right? So the first thing to do is probably jot down those. And more you write it down, better for you.
Okay.
Right? Then you can revisit it. Okay, I written this down. Where am I? If you see my plan on retirement, it is written down yearly. The withdrawal per month from the age 62 is written down.
Which is?
How much I want.
Yeah,
per
but how
month.
much?
I mean, it depends on my
Okay.
life. It's
Okay.
a personal thing,
Fair.
but it's a fairly lot. If I put
It
that
is.
figure,
Yeah.
trust me, people will start shouting.
So it's important to put pen to paper.
It is
also.
written down.
Yeah.
So I will know whether I'm course for that. I will also
Understood.
know whether I've whatever written down as my withdrawal is correct or not. Suppose by that time my needs change, then maybe the 70-30 will also change.
Okay. Fair.
So everything works together.
Yeah.
Right? It's very similar to your health plan. Right? Both are very similar. But till you don't write it down, you will not be able to judge yourself, is the point I'm making. The people tend to check the inflation part, but the bigger worry to check, it's not a worry, but it's something to keep in mind, is your lifestyle inflation.
Absolutely. You said that that's a real thing, and
That's
we
the
need to be
bigger thing.
cognizant.
If you are on track on what you are using, A shirt I used to buy at 2,500 rupees earlier is costing me 5,500 today, right? And that's serious upgrade.
Correct.
For the same shirt, I'm not changing my shirt, okay, and not from a large brand also, right? So that's a lot of money,
Correct.
right? So it's, I'm just putting one thing in place. You'll look at the cost of tea that you used to be having just 5-7 years ago, and think everything.
Correct.
And food inflation and education inflation are serious inflations.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.